Hello friends, hope you are all doing well. Have you checked the market these past few days? If you haven't, please take a deep breath now and hold on to your glasses, because we are witnessing a financial spectacle that might go down in history. It is not gold, it is silver. London silver just broke through the $94 mark in just 50 short days. The price right at the start of spring 2026. Silver dropped a bombshell on the whole world. Who on earth is behind this frantic buying spree? Will this rally smash right through to $100? Today, I am going to join you in uncovering the truth behind this feast of fortune. We often say gold and silver are inseparable. For a very long time in the past, silver was like gold's shadow. When gold rose, it followed. And when gold fell, it followed. Sometimes it even seemed a bit like a weakling, highly volatile and unloved. But, come everyone knows, gold is very expensive, and now London gold has also hit a new high, surging to around 4,670. If you had bought gold at the beginning of the year, the gain would be about 75%, which is already an excellent performance, beating the vast majority of fixed deposits and savings insurance. But what if you had chosen silver back then? The gain was a staggering 190%. What does that even mean? In other words, with the same amount of money, the profit from investing in silver back then would now be more than 2.5 times the profit from investing in gold. This is no longer a simple rise. This is a violent revaluation of asset value. What kind of signal does this give us? It means the smart money in the market, the funds with the most sensitive noses, are frantically pouring into silver. Right now, everyone is discussing a very crucial indicator called the gold-silver ratio. I often explain to my friends, what is the gold-silver ratio? To put it simply, it is how many ounces of silver you can get for 1 ounce of gold. It is like when we go to the grocery market to buy vegetables. If before, 1 pound of beef could be traded for 80 pounds of radishes, but now it can only be traded for 50 pounds of radishes. What does that mean? It means the radishes have become more valuable. In the past dozen or so years, this number often hovered between 70 and 90, and even broke through 100 at one point during the pandemic. Back then, silver was severely undervalued. Some people even said silver had lost its monetary properties and only had industrial uses left. But now, the market has slapped these people hard in the face. The current gold-silver ratio has already dropped to 49.9, hitting a 14-year low. This means silver is undergoing an unprecedented return to value. It is no longer a forgotten supporting character, but has become a core asset that everyone is scrambling for. A lot of friends have DM'd me asking, this is rising way too fast. I am a bit panicked. Is someone manipulating the price? Actually, this kind of extreme market action is often a characteristic of a major bull market entering its climax. But this time, it is different. It has shattered many of our perceptions from the past few decades. This isn't simple manipulation by capital. This is a redefinition of silver's value amidst a changing global landscape. We must use a completely new perspective to look at these silver coins and silver bars in your hands. In the time ahead, I am going to break down this complex international situation into a few stories you can understand. We're going to talk about why silver keeps rising even when the economic data looks bad, why high-tech can't do without silver, and that most critical question, can we still buy in now? This next point is very important, so everyone please listen up carefully. Because this recent surge in silver prices has broken an ironclad rule that our financial community has believed in for decades. If you still look at the market with the old mindset, you might misjudge it this time. In the past, our textbooks always said that most silver is used for industrial purposes, like for making circuit boards, soldering materials, chemical catalysts, and so on. So the logic is very simple. When the economy is good, more factories are operating, which means silver is being used, demand is high, and only then will the price go up. Conversely, if the economy is bad, factories shut down, nobody wants silver, and the price has to fall. So in the past, when those Wall Street analysts looked at silver, they would all look at America's Manufacturing Purchasing Managers Index, also known as the PMI. This index is like a thermometer for the economy. 50 is the dividing line. Above 50 represents a boom, and below 50 represents a recession. But my good friends, the situation has changed now, and it is a huge, huge change. The latest data tells us that America's manufacturing industry is actually not doing well. You could even say it is a bit terrible. That PMI index has been below the boom, bust line for 10 consecutive months, which means that traditional manufacturing is actually shrinking and factories are not that busy. According to past experience, shouldn't silver be the thing getting sold off right now? But why is it skyrocketing like a runaway horse instead? This brings us to the first core point we're going to talk about today. The pricing logic for silver has changed. What is driving silver prices up now isn't the traditional pots and pans or ordinary industrial demand, but two new immense forces. One is risk aversion, and the other is a monetary credit crisis. Let's talk about risk aversion first. As everyone knows from the news, the international situation hasn't been very peaceful lately. America, on the other side of the ocean, has a new administration, and their policy style has taken a sharp U-turn. That former president we're all familiar with is back, and as soon as he took office, he started brandishing the big stick of tariffs, saying he is going to impose tariffs on multiple European countries, starting with a 10% hike, and it is going to go higher, even up to 25% for some goods. What does this mean? It is like two neighbors who do business together, suddenly getting into a fight and starting to charge each other tolls. Doing business gets harder, trade barriers are raised, costs go up. So what happens to prices? They're definitely going to rise. This is imported inflation. When people expect their money to devalue and business to be risky, where does the capital flow? Of course, it flows to the safest places that best preserve value. This is risk-averse sentiment. In the past, everyone only knew to buy gold to hedge risks. Gold is indeed a good thing. It is the ultimate currency. But the problem is, gold is too expensive. Now, almost $5,000 an ounce. For many institutions and ordinary investors, the barrier to entry is too high, and the upside seems not that big. So everyone looked back and realized silver is real money too, and it is cheaper, more volatile, and historically, it also had its moments of glory. This panic caused by trade uncertainty has driven large amounts of capital into the silver market, treating it as a life-saving talisman. Just as the experts at CICC said silver's attribute as a strategic resource has now been strengthened. It is not just an industrial metal. It is a strategic reserve, a hard currency that can give you peace of mind in chaotic times. Moreover, there is another crucial point, and that is the wavering credibility of the US dollar. In the past few years, the US has issued too much debt and printed too much money. Although they want to tighten now, the interest on their debt is already suffocating them. Central banks all over the world, especially those in emerging markets, are all doing one thing: de-dollarization and buying gold. And when they've bought enough gold, or when it gets too expensive, silver naturally becomes the best alternative. This is a vote of no confidence in the fiat currency system, and silver is the most affordable ballot now that we've talked about hedging in the overall economy. Let's chat about a more long-term, more stable, and you could even say an essential driving force, and that is the technological revolution. We used to think silver was just for making jewelry or silver bowls and chopsticks. At most, that silver nitrate was used for developing photos back in the day. But did you know, in today's high-tech era, silver has already become an irreplaceable industrial lifeblood, and some people even call it the green oil of the new era. The Oxford Research Institute recently published a report that got me all fired up. They assert that in the next decade, silver will be the core metal for the green energy and digital transformation. Why silver, not copper, not aluminium? Because physics tells us that silver has the best electrical conductivity of all metals, bar none. At the same time, its thermal conductivity is also excellent. Just take a look. What are the hottest and most money-burning industries in the world right now? First, solar photovoltaics. Right. Now the whole world is working on carbon neutrality, and everyone's installing solar panels. Whether on rooftops, in deserts, or on water surfaces, they're everywhere. And to convert sunlight into electricity and transmit it out efficiently, the most critical material in the process is silver paste. Although technology has advanced since then, with hopes of using less silver, it just can't keep up with the total installation volume, which is simply too huge. This is like how even though cars are more fuel efficient now, if there are 10 times more cars, there is still not enough gas. In 2024, global silver consumption for photovoltaics has already exceeded 6,000 tons. And this number is still growing rapidly. Second, AI, artificial intelligence. I don't need to tell you how hot AI has been these past 2 years, right? ChatGPT, various large models have changed our lives. But behind these AIs, there is a need for immense computing power and huge data centers. When these servers are performing high-speed computations, they generate a huge amount of heat and also require extreme transmission speeds. This is where silver's properties of good thermal conductivity and fast electrical conductivity come into play. It is the cooling patch and accelerator in these high-tech devices. Without silver, the operational efficiency of AI would be compromised. Third, new energy electric vehicles. A traditional gasoline car might not use much silver. But an electric vehicle, from the battery management system to various touchscreens, radars and sensors, needs silver contacts and wires everywhere. As the penetration rate of electric vehicles gets higher and higher, the demand for silver in this area is also growing exponentially. So, my good friends, please see this trend clearly. Although traditional manufacturing might be shrinking, these emerging industries that represent the future, photovoltaics, AI, new energy vehicles, their demand for silver is growing explosively. This is called a structural transformation. When we invest, we must invest in this kind of direction that represents the future. In recent years, just the silver used by the solar industry alone has been hitting new highs every year. This isn't hype. This is real, tangible consumption. When silver is used in industry, it is often used in trace amounts, and recycling is very difficult, which means that a lot of the silver that is used up is just gone. It doesn't return to the market. This is a true case of demand exceeding supply. Now that we've talked about demand, let's look at supply. This is also the point that worries me the most, and also excites investors the most. The silver in the planet's warehouse is almost not enough to sell. This is like when we go to the supermarket to buy bread. Normally the shelves are full, so no one thinks it is precious, feeling like they can get it any time. Suddenly, one day, you find the shelves are empty. The warehouse manager tells you the warehouse is also empty, and they don't know when the next shipment will arrive. So what would happen to the price of that bread? It would definitely skyrocket. Right now, a silent but fierce scramble for silver is happening globally. Because of the US tariff policy and safe haven demand we mentioned earlier, capital from all over the world is frantically buying silver, especially in the US market. What did this lead to? The silver originally stored in London vaults is being shipped to the US boatload by boatload. The original inventory in Asia has also been sucked away. Let me give you a specific example. The UK. The UK used to be a traditional silver trading hub and a major exporting country, selling silver abroad. But by the end of 2025, the UK had unexpectedly become a super importer. Data shows that in just 1 month, the UK had to net import over 1,600 tons of silver. Why? Because the local inventory in London was not enough. The exchange needs to make deliveries. Clients want to take physical possession, and if they can't provide it, that would be a default. So they were forced to source it from all over the world at high prices. Let's look at a set of the latest hardcore data. This is fresh out of the oven. Just last week, the silver inventory at the US COMEX exchange dropped again, and it is now only around 430 million ounces. You might say, over 400 million ounces sounds like a lot. But you have to look at the details. More than half of this is registered warrants, which means it has an owner and they might not sell. The real liquid inventory that can be taken out for delivery and sold at any time has already reached an all-time low. If we broaden our view to a global scale and deduct the inventory locked up by large ETF funds, the actual physical silver available for circulation above ground globally has probably dropped to below 40,000 tons. This number sounds huge, but it is actually only equivalent to 1 year of global demand. In other words, if nobody sells, the inventory could be eaten up in a single year. This is a classic case of too many monks and not enough porridge. There is a very famous investment expert in the Netherlands named Karel Merks. He recently issued a warning, and he put it very bluntly: if the price of silver breaks through $100, many solar panel manufacturers might be forced to halt production because they can't buy raw materials or find them too expensive, or they might start hoarding. This isn't alarmist talk. This is a real crisis that exists in the supply chain. There is also a supply side problem that many people overlook: silver. This stuff, a lot of the time, isn't mined specifically. It is dug up as a byproduct when mining copper or gold. This is called a byproduct mineral. This means that even if the price of silver skyrockets, it is very difficult for mining companies to expand production just for silver. Because if the price of copper isn't good, they won't start operations, and the production of silver naturally won't go up. This is the rigidity of supply. Demand is exploding, inventory is bottoming out, and supply can't keep up. With these three great mountains pressing down, how can the price not rise? This is why I say $94 might just be a way station, not the final destination. Speaking of which, many of our veteran friends might recall an old story. A legend that has been circulating in the financial world for a long time. The great precious metals super bull market from the 70s to 1980. That was a memory for the previous generation, but perhaps it is the best textbook for our generation. The world back then was strikingly similar to how it is now. In the 70s, the whole world was also facing severe stagflation, economic stagnation, soaring prices, and the outbreak of the oil crisis. Everyone lost faith in paper money, especially in the US dollar. So what happened? Gold rose more than 20-fold in 10 years. And silver was even crazier, fueled by the Hunt brothers. It once shot up from a few dollars to $50. The gold to silver ratio back then even dropped to 15. What does that mean? It means 15 grams of silver could get you 1 gram of gold. The current situation, although not as dramatic as back then, has the same underlying logic. We are also facing the risk of stagflation, like conditions with insufficient economic growth momentum. But stubborn inflation, we are also facing deglobalization, broken supply chains, and geopolitical conflicts. People have also lost trust in the US dollar, and central banks are desperately buying gold and silver for their reserves. History doesn't simply repeat itself, but it often rhymes. The big bull market back then lasted for a full 10 years. If we consider the present as a new major cycle, starting from 2019, the revaluation of silver has probably only reached the halfway point. Of course, we must also look at it objectively. The madness of 1980 ended in a total mess. And however the price went up, that is how it came down, because there was too much speculation back then. But what is different this time is that we have real industrial demand to support it. Solar panels aren't just hype. They actually have to be installed on roofs. AI servers aren't virtual. They are actually running. This gives the price of silver a very thick safety cushion. So for us investors today, the most important thing isn't to guess if it can rise to 200. That is up to God. What we need to understand is the current situation. As long as the cracks in the US dollar's credit are still there, as long as new technologies are still developing, as long as the inventory shortage problem isn't solved, the long-term bullish trend for silver will not change. After talking about so many good things, everyone is probably getting that itch. But I have to pour some cold water on it right now. Or you could say, offer some reassurance. The market may be good, but you absolutely must not get carried away. Investing is a marathon, not a 100-meter dash. Silver has now broken through $94, and it looks like it is about to challenge the $100 mark. This is a very important psychological barrier, as well as a round number barrier. At this point, the market volatility will definitely be very intense. It is like climbing a mountain. The closer you get to the summit, the stronger the wind, the steeper the path, and the thinner the air. Especially the gold to silver ratio, it has been correcting very quickly now. If it corrects too quickly, the market might see selling pressure from profit taking, leading to a drastic, volatile pullback. If you can't stomach it, you might get shaken out. So, here are a few of the most pertinent and practical pieces of advice I have for you. Friends, first, absolutely do not invest with borrowed money. Absolutely, absolutely do not use leverage. At our age, what we're after is preserving and growing our assets. Wealth that lets you sleep at night, not gambling our lives away in a casino. This market trend might be fierce, but the up and down shakeouts are also brutal. Silver's volatility is 2 to 3 times that of gold's, and if you buy with borrowed money, it is very easy to have a mental breakdown and even lose everything. Second, build your position in batches. Never go all in. If you already have silver bought at a low price, congratulations. Now is the time to enjoy the profits. You can take some profits off the table to be safe, turn paper wealth into cash in your pocket, improve your life a bit, take your family on a trip, have a nice meal. That is the meaning of investing, right? For the remaining position, let the profits run. If you haven't gotten on board yet, don't rush to chase the high all at once. Now, patiently wait for it to pull back and buy slowly in batches for a safer cost basis. Third, focus on physical assets. Stay away from paper wealth. For us senior friends holding paper silver or futures, staring at the screen, jumping up and down every day, our hearts can't take it. It is better to buy some physical silver bars, silver coins, and lock them in a safe. No matter how the storm rages outside, if you have the goods in your hands, you won't panic in your heart. Besides, if an extreme situation really happens, physical assets are the only assets that truly belong to you. Fourth, pay attention to the core variables. Next, we need to keep a close eye on 2 things. One is the attitude of the US Federal Reserve to see whether they will cut interest rates to save the economy or raise rates to fight inflation in the face of inflation and economic recession, which will directly affect the trend of the US dollar. The other is the geopolitical situation in the Middle East, to see if there will be new variables over there. These are all key factors that affect the short-term fluctuations of the silver price. My dear friends, today's sharing is a bit long, so thank you for patiently listening up to this point. Because facing this epic market trend, I really hope to explain the logic behind it thoroughly to you, so that you can earn money with a clear understanding. Hold on to it with peace of mind, and not just blindly follow the herd. Silver surging to 94 US dollars isn't just a numbers game of wealth. It is an epitome of the changing times. We're very lucky to be born in this era of great change, to be able to witness such history and even participate in it, protecting our wealth. But I'd like to share one last heartfelt thought with you. What makes us rich isn't just gold and silver, but our mentality. No matter how the market changes, whether it goes up or down, maintaining a calm mind, safeguarding your own health, and taking care of your family are our greatest treasures. Investing is meant to make life better, not to fill it with anxiety. If you are losing sleep over investing, then you've got your priorities backward. All right. If you feel that today's in-depth analysis helped you see through the fog of the market and put your mind at ease, please don't forget to hit the like button for me, as that is the greatest encouragement for me. Please also subscribe to our channel and share this video with your friends who are also worrying about their retirement funds. We will continue to be here to be the beacon on your path to wealth, helping you keep watch through every rising storm and surging tide. No matter how the world changes, I hope everyone can eat well, sleep soundly, and be able to laugh. I am your old friend. See you in the next video, and I wish you all peace and safety.